Mm.
Yeah, that sell is tempting though.
That sell was
That motherfucker
highly
is tempting.
empty. USD JPY is a nice one too, though. USD JPY, I love it going bullish if we get
Oh yeah, look at that structure. Oh, it's
25.
fresh too. Super fresh.
What you looking at, JPY?
Yeah.
Like it's waiting for a breakout.
Hmm.
Oh, that 30 minute is sitting on right now. Inefficiencies above it.
This is tempting. I want it.
Uh,
Fuck. 8 minutes though. Yeah, I'm not gonna
eight
do it.
minutes.
I'm not gonna do it.
8 minutes.
That motherfucker's gonna sell off through the floor.
I'll tell you what,
Really be
I'm gonna hit
upset.
this. After I hit this button, I'm gonna go in and knock out this work day. I'll
Hmm.
set my stop loss. As the market starts, as we get closer to 11, I'm gonna find an area where I want to put my stop loss. If buy or if sell, I'm gonna be trading gold. I'm going gold. Yeah, one thing is I don't know if he's saying exactly what I'm hearing, but it made me think of something too of what we were talking about earlier, and just after the interest rates get decided, right, 25 or 50, it doesn't stop there. Like the data still comes out. You know what I'm saying? Like like we have data tomorrow that is going to be heavily impacting. Just consolidated beautifully right between that level. Check our dollar.
Bank of Japan. That's something to pay attention to on Thursday. This dude's just bringing up. They're talking about how this is a global event,
Mm.
not something that just impacts the United States and Japan. It could impact what Japan does uh, on Thursday,
The
and the Bank of
the
England
global
on
event
this.
on Thursday or a specific Japan event you were saying?
The Fed rate cut today is a global event.
Oh, facts, right.
That'll definitely could impact some of the decisions that Bank of England and Bank of Japan will make
Yes,
on
yes, yes,
Thursday. So
yes.
come on.
Mainly too, because what I didn't know was the imports. I was weird looking at that from Japan, bro. They import so much, and if their currency continues to get worse against the dollar, that hurts them. It costs more for them to purchase the same products from the U.S. The same amount of products. I like my stop loss at 25.80 if we sell. 25. I even like 25.82. Give me a little more wiggle room from those wicks. 25.82.
3.5. 3.5 minutes. Here we go. Coverage for the first time in
25.90.
4 years. Como gold.
Go. Here we go. What are you watching it on?
YouTube, Bloomberg Television.
Just watch it on my FX book. See if it'll report there. Let's go. Let's go. Let's go. Consensus is 5.25, meaning a 25 base cut, which would support it. What's gonna happen? I'm saying we get
I
25.
Yeah, I wonder how long they've known what they're gonna do. It kind of just like I wonder if
If
it's
we
something
think,
that truly like they really like wait until say yesterday or the day before to really
yeah,
decide, or if it's something that they decide a while back. And
yeah,
yeah, it's interesting.
no, it definitely is. Honestly, I mean, yeah, it's kind of like a scouting report. Day before the
Right. And
game, day of the game, somebody
and
gets injured.
right. Right. And to my knowledge, the effects it can take up to 2 years for the effects to really be understood. So it would take 2 years for them to be understood. Like you making the decision, it can make sense for them to kind of have that decision made and prepare for basically how they're going to release this information and prepare for the reaction to this information. Um, but
Uh-oh,
yeah,
here we go. 15 seconds. Here you go.
I'm going deep
Got
in
my
on this
stop loss
low
in.
key.
Got my stop loss in. If I see that 50 number come up, 25, going crazy. Gold just bought. I did not buy. Gold's buying. Let's see what we got. It's 50.
50.
It's 50. I'm buying. I'm buying.
Why did it do that?
I'm buying. And we got me in two positions, but I'm buying.
It did. It got me too.
Yeah.
It put
It
me in
should
two
lag.
positions too. What
It
the
should lag.
heck? Oh,
All right. USD JPY. USD JPY should sell off. Exactly what we're getting on USD JPY. Yeah, now we just allow my analysis to do its thing. I'm about to go ahead and get on out of here. I got my I'm in stop loss. Where do I like that at? Definitely subject to correction. Yeah, because it put me in two freaking positions.
Oh, bro.
I'm glad it just marges me out of one of them.
Bro.
Yeah, just because it put me into it's cool though.
Yeah, that's tough, bro. It's tough. I'm in that too.
I like what this tells
Hopefully
me
we can
though going
survive.
forward. Yeah, for the dollar though, just thinking about
Yeah.
the what we know it's gonna interest rates are gonna do to money supply.
Mm-hmm.
We'll be able to have a lot more direction on that. But then these news folders are gonna start having a lot more impact, in my opinion. Um, from because there's no telling that the interest rates can't get trimmed back, to 25 once this is all said and done back in November. So, but I'm gonna holla at Jim. Get out of here.
All right, bro. Appreciate you sliding on. I'm gonna stay on
All
for
right,
another 30.
live. We'll see you guys tomorrow morning. Tomorrow morning.
Yes, sir. Yes, sir. Yes, sir.
Just on the margins, not significantly, yields just slightly up on this idea that they're going to go bigger and potentially even more.
All right, yeah. So that was tough, lot. That was tough. Entered me in on two positions. Risky play. Risky play. I will say, but um, with just the weight of this, I think this initial reaction will just kind of continue to kind of move for this bullish position. But again, we shall see. We shall see.
This actually became such a knife's edge kind of decision. And just to add to that, 10 officials penciled in 100 basis points or more cuts for this year. 9 officials penciled in 75 basis points or less for this year. It actually matters quite a bit for market expectations, especially given some of the policy uncertainty next year.
So TK, we get 50. We get 50, and now we're waiting for the next act as a news conference in 26 minutes.
50 basis point cut. Let's see how it reacts. It's crazy, because the most people were, well, I know the conversation has been 25 or 50. I feel like there's been more people kind of leaning. There's more people kind of leaning into that 25 camp. Yeah, man. Shout out Powell hitting us with the bombshell this morning.
But it is not a weakness. This is not just a 50 basis point cut. This is a dovish 50 basis point cut. I mean, now, I agree with you, John, that the dovish part comes from the median dots. But if you look at the range, it doesn't look at dovish. But that's not what the market is going to hit. The market is going to look at the median dot and will interpret this as a dovish 50 basis points cut. And the first reaction was actually steepening of both 2s10s and 2s30s, which tells you something about what people are worried about.
To some extent, this median dot validates market pricing coming into this decision. Is that sufficient? I'm looking at equity market reaction right now. We're up by 0.5%. We've still got a news conference, a question we've asked for the last several weeks into this. Are we going to end up with disappointment on the other side of this news conference with Chairman Powell? What would your question be now?
So first of all, normally he's more dovish than the statement. So that's going to be pretty hard to do this time. But let's wait. My question will be, what has changed since July when you decided not to cut rates? And now there's this very aggressive cut and aggressive signaling. What has changed?
The speech in Sintra, Portugal at the start of summer, very different to what we're hearing from the FOMC just several months later. Joining us now to discuss is Bob Michael at JP Morgan Asset Management. He joins us out of London this afternoon. Bob, we just want your first impression to the decision. What do you make of it?
It hit on pretty much everything we were looking for. probably a little less dovish than we thought in two instances. One, there was a dissent, so it wasn't a slam dunk, and we would have liked.
Actually, I'm gonna lock in just this dovish versus hawkish terminology.
Somewhere around 2.75% to 3%. But otherwise, as we had been guided over the last week, nothing to quibble about.
Bob, which bond series or individual bond provides the most information right now? Is it a real yield? Is it the nominal full faith and credit? What's of the most value to Bob Michael right now?
Credit spreads. Credit spreads.
Dovish, favoring looser monetary policy to stimulate economic growth. Hawkish, meaning raising interest rates or reducing monetary stimulus.
It's just the Fed, a long way from neutral, perhaps as Mohammed hinted, a meeting or two.
Break even and profit on both positions now.
So they're starting to get towards neutral. All is well.
Okay, all is well. And yet what we saw earlier this morning was an increase
Going to continue
in
in.
mortgage applications. What we've seen is already the bond market pricing in all of this and then some. And basically the statement only encourages that even more. Do you not see a risk of potentially reignited inflation, Bob, that we could potentially see expressed in the
That was still falling down, so I like that'll make me really like this bullish position on XAUSD.
We're a long way away from that. We're looking at the 3-month annualized rate of core PCE running at 1.7%. So that's not inflationary. There's signs of disinflation everywhere. When you look at the labor market, they talk about full employment. Well, the low in unemployment was 3.4%. A couple months ago, it was 4.3%. That's up 0.9%. You only see that when there's threat of.
Back to the slight drawdown. This most recent bearish candle.
They highlighted to us that the neutral Fed funds rate is somewhere around 3%. That's a debate we
Should
could
be
have
right
for
break
a
even.
long time, but it's nowhere near 5.25%, 5.5%. So they can start taking pressure off of businesses and households without reigniting inflation.
Bob, I know they call you Bob Michael, but you told me earlier it was Bob Michelle, so I'm going to stick to Bob Michelle. Bob, speaking.
Mohammed, I think to we're going
These
to
guys are funny monetary policy guys.
So Bob, speak a little bit to the revisions in the projections and particularly unemployment. What do you make of that?
I didn't catch them. What did they do?
They pushed it up.
Yeah, I think they have to. I think they have to acknowledge that we're at a challenging time, that there are new entrants to the labor market, but those are still unemployed U.S. workers. And they have to acknowledge that we're not below 4% anymore. We're heading a little bit higher. And that's why you need the policy response to start with 50 basis points. I'm okay with that.
Yeah, but Bob, I think we've got to talk about this a little bit more. And I'm pleased we went to unemployment. Unemployment right now in America is at 4.2%. These are the Fed's projections out in 2024 year end, out to 25 and beyond. They've got projections of 4.4%, the median projection for unemployment this year. Next year, they've got it at 4.4%. Given the move we've seen over the last 12 months, Bob, how aspirational is that? How realistic is it that we just kind of pause around these levels for the next 18 months?
Well, we very well could. If we get 225s over the next two meetings and we bring rates down 100 basis points, what we know is there's still a shortage of housing. There are first-time home buyers queued up to buy homes.
And profit on both positions. Yeah, I want to see us break out through this level here. Especially if I see change in angle for my cloud. I'm feeling fantastic about this.
Through bank loans, through private
Dollar still falling.
Those are floating rate loans.
Not showing any sign of immediate correction.
Starting with SOFR at 5 3/8%. You take 100 basis points off of that. That could help.
Full close. My bigger position. I'm going to stay in the position which I'm not quite favorably positioned.
If the Fed does its job.
Hey, Bob, appreciate catching up as always. Bob Michael there.
And that's really moved just so I'm not in two positions.
Market that I think are very, very interesting. We've just gone 50. And in some ways, the dot plot is validating the pricing in this market ahead of time as well. And what you're seeing at the long end is the long term.
So now with this position, I'm gonna utilize this lagging line. I'm gonna utilize my traditional exit confirmation. As soon as this white line here moves to the opposite side of the cloud,
Sniffing out.
Well, it's sniffing out.
yeah, I'm gonna take my exit.
Greater inflationary risk than the rest did. Look, I can make an argument about it. It might mean that we're going to suddenly get runaway style inflation. That's not what it's saying. But what it is saying is that on the margins, the idea of a bigger and frankly a dovish 50 basis point rate cut really highlights how inflation is still back on the table, at least on the margins.
Let's talk about dual mandate balance. Mohammed, your impression is that it's a single mandate central bank now. And you don't think we should take our eyes off the other side of the mandate? Do you think the market's speaking to that, just on the margin this afternoon?
I think at the margin, yes, but I do think that this is the reaction of a single mandate Fed right now, especially if you believe 2% is the inflation target.
Let's cross over to Dan Swung and bring her in of KPMG. Dan, we'd love your thoughts on the decision, and then we can get into the nuances. What do you make of the 50 instead of the 25?
This was a huge victory for Jay Powell, who really laid out at his Jackson Hole speech that he was worried about employment. And that is what this is about. And Mickey Bowman doing a dissent, Powell willing to take a dissent among the board members as opposed to among a president. That is how much he wanted this 0.5% rate cut. And I think that's very important. I think you're going to see it couched and explained within the context of several participants at the July meeting thought they were ready to go ahead and cut. So this is a bit of a catch up to that. And so that should help temper a little bit this dovish read on it. I was surprised that they kept the risk balanced, although clearly the focus is now on employment and not allowing the situation in employment to become much worse. Remember, we're at 116,000 payroll gains, 3-month moving average as of August. That's not statistically different from zero. Combined with the downward revisions we saw on August 21st, the day before Powell gave his remarks at Jackson Hole, those downward revisions, record downward revisions, even if they're not as large as they
Interesting. So gold with this move, this is gold's all-time high. We witnessed it here today on this live stream. We look at our
which could mean
look at our daily time frame. Yeah, killed that daily high. Not killed it. Still pretty close to the last daily high. We can see here from Monday. Just
per year. I've got debt and deficit that Halbronner and Bernstein never dreamed of. Diane Swank, is this a Fed just dealing with our stimuli? Is this a Fed just dealing with debt and deficit to the sky?
I need some more coffee. I'll be right back.
And despite the fact that we still have a lot of debt. So, that yes, we do have high debt, and I do believe we need to deal with that at some point in time. And I don't think we have anyone who's willing to talk about it on either side of the aisle, which is another issue. We could talk about that at a later date. But right now, we've got a Federal Reserve that's no longer buying that debt. And you've got a Federal Reserve that is seeing inflation come down despite the fact that we have high debt. And that's because on the margin, after we get past the sort of 6 months that we put a whole year budget into, from March into October 1st, you get a continuing resolution at best for year end, and you're going to get more constraint on spending, I think, as we get into 2025. Diane, one reason why this comes as a surprise, this decision, because there was good data that really moved the needle between the time of when the quiet period began and now that would shift us toward 50. Why do you think there wasn't more clear communication? This was the Federal Reserve ready to cut rates by 50 basis points. Frankly, I don't think that Jay Powell, by the time the blackout period hit, had the vote in his pocket to be able to do that. And I think we saw that in some of the mixed messages, even the day of the blackout period. Chris Waller, governor on the Federal Reserve, had said, you'd be open to progressive growth. But he didn't seem to be really ready to.
Let's see if gold continues to push this all-time high here. I'm gonna play the risk on this position.
Let's get to this quote from Neil Data of Renmark. just out at the moment. Here's the issue. The balance of risks have changed. In June, most saw balanced risk to unemployment. Right now, this is completely flipped. Most see risk to unemployed skewed to the upside. This will not be the last time we see a 50, in our opinion. Lacey, your thoughts?
This is basically what's being priced into this year. I mean, how else do they get to more than 100 basis points potentially by the end of this year? And if you think about it, it raises a lot of questions about what they are seeing that suddenly makes that such a consensus, given that we've gotten a lot of mixed messaging.
Let's head back to London, catch up with Bob Michael at JP Morgan Asset Management. Bob, I'm sitting there in cash. I've been sat here for a long time. You've been warning me for a long time that I face real reinvestment risk. The Fed's just cut 50 and I'm freaking out. I give you a call. I'm now worried about another 50 and maybe another 50 after that.
Let's say full close here.
We're telling clients, just get into the bond market. Just get into a general bond fund. It could be
Just took full close in that position. Given the risk at this all-time high, just a little bit higher of risk. I'm always weighing just the risk on any given position in multiple different domains, as far as like what I'm technically seeing, what fundamentally what I'm feeling and observing. Yes, given the position, given we're at the all-time high, I'll be able to scale in if we continue. If gold wants to continue to push, as we've seen, whenever it really makes these moves and creates drastic new all-time highs, it's going to move significantly, and I'll have plenty of opportunity to get back in there and get my hands dirty. But gonna secure the profit on those two positions there.
So it would not.
And my risk on that position was a little bit higher.
Because the market has been conditioned to ask for more and more, and it gets more and more. So it wouldn't surprise me if that is what happens. I will go back to the significant dispersion in people in FOMC members' view as to what the destination looks like. And that dispersion.
If our dollar pushed below this area,
I think it is.
I'm really good about scaling back in.
That's smart. Any place to go here. Let's try this. You've got a wonderful reading of America away from 3 zip codes in Manhattan, the quadrants of Washington, D.C. This rate cut, how does it affect America that are not the elites, not the people enjoying NVIDIA to the moon?
Well, this is really important because the rate cuts, the short-term rate cuts are what come through on loans that consumers take out. This is beyond the mortgage rate situation. This also helps the mortgage rate situation, obviously, but the real issue for consumers are short-term interest rates and how they are priced on their debt. Now, on the credit cards, the average credit card rate is about 25%.
Stuck at this, dollar. DXY stuck at this level. 100.36. Continuing to push down.
Businesses, middle market through small businesses, it affects all those loans. And right now, you can imagine a lot of people are going to get some relief in terms of that. Now, the good news is there's not a lot of overhang of debt for consumers, and they can service the debt they've got. But for those lower income households that have already exhausted all of their savings and then some, this is good news. They rely on lower rates to buy used vehicles. They can't even afford to buy new vehicles anymore. That goes right up into middle income households. So that's where we'll see some movement, but it's not immediate. You're not going to see that. That also
Gonna take a low risk position on USD JPY.
The market front running when the real message here is that this was not
Dollar falling, USD JPY falling. Look at the angle of my cloud here. Again, less risk here than gold. Trading this pair, less risk here. Obviously, we all know the volatility of gold. Thus, the volatility equals more risk. So I'll mitigate that a little bit by taking the same. It's really the same position. It really is the same exact position. I'm essentially trading the US dollar. And it's pairing with another currency is essentially just what allows me to profit off of it.
just one of the best, as always, the clinic. Diane Swamp there of KPMG. November 7th could be a very, very different meeting. If you are just joining us, welcome to the program. 25 or 50? We got 50 from this Federal Reserve. The outlook, unclear. 10 out of 19 officials favoring lowering interest rates by at least an additional half point over the remaining two meetings of 2024. And the next meeting in 2024 could be very interesting if we do indeed have in hand the outcome of the presidential election. Matt Lazzetti of Deutsche Bank joins us now for more. Matt, your first reaction to this one, please, sir. We get 50.
Yeah, I think it's all about the messaging that we hear from Chair Powell about the reaction function as we look ahead. You know, as we were thinking through, if they go by 50 basis points, what is the communication channel for them? I think it's two things. One, they have to project confidence in the economy, positivity in the economy, so they avoid a negative confidence signal. And then two, I think that they want to send a signal that this is not the new norm, that they're going to be rationing down at 25 basis point increments. And as I look at that dot plot and the skew for this year, it does seem that there's a pretty strong kind of consensus around going 25 basis points from here. I think 18 out of 19 dots showed only an expectation of 2 more 25 basis point rate cuts or less. And so I think Powell can paint this as a one-off. It was meant to right-size monetary policy to a lower inflation environment, ensure that the real rate doesn't rise too much, and to really show that kind of actions speak louder than words in providing confidence on the soft landing.
Matt Lazzetti, the 10-year real deal just printed below 1.50. To me, that's a huge signal coming out of the pandemic. What does a diminished real yield do for American business, American finance, and investment?
Look, I think we should expect that the goal of this is to keep financial conditions easy, to ensure that financial conditions don't over-tighten and put a soft landing in jeopardy. That is ultimately the legacy of Chair Powell, and I think that he took out some insurance against that today. I think that's a good outcome for the economy. Hopefully he can message it in that way, which is they have a positive outlook. This is not the starting of a 50 basis point cutting cycle. And I think if you get that, soft landing prospects improve, financial conditions ease, and we have a very good outcome for the economy.
Matt, one of the stickiest areas of inflation has been the housing market. And what we've seen there has been recently an uptick in mortgage applications, as well as just in general, some of the home lender stocks. How quickly could you see a transition from a market that is completely flat on its back, not shifting around, moving at all, to one that is robustly price discovering to the upside with people given renewed confidence by lower rates?
Yeah, we got mortgage purchase applications this morning, and they did show a tick up, more driven by refinancing activity than purchase activity. It does seem to be lagging a little bit the move in the mortgage rate so far. My own view is I think that's driven by, when you look at the University of Michigan or Conference Board, so many concerns that down over the next year. And so that has to happen, and maybe as rate cuts happen, and as mortgage rates.
All right, I'm gonna push this live about 5 more minutes. Gonna get on with the rest of my day. 2 for 2, technically 2 for 3. Took one position early on this morning before the rate cut released, but exited realizing I didn't really want to be in that position. So I did it. Simple as that. Pretty pragmatic approach there. Then the two profitable bullish positions on gold taken. Roughly should be 20 about 16% gain on between those two trades. So happy about the execution there. Look at gold go.
So I think it's all about the reaction.
I was looking at the one.
How does he respond to that?
Look at that candle. Wow.
Either for another 50 basis point or even higher rate cuts.
Matt Lazzetti at Deutsche Bank. Bob Michael at JP Morgan Asset Management still with us. Bob, you love asking this one too, so I'll ask it for you. What's your question for Mike McKee in this news conference a little bit later on this afternoon?
Has the concept of an equilibrium, long-term neutral Fed funds rate expired? Do we need that anymore? Shouldn't they be talking more in terms of a real Fed funds rate, maybe minus 1% to plus 3%? I mean, for goodness sakes, in my career, I've seen the Fed funds rate at 0 and 20%. So trying to target something like that is nonsensical to me.
Hey, Bob, got to catch up as always. Bob Michael at JP Morgan Asset Management. We get 50 from the Federal Reserve. Your news conference is 5 minutes away. The price action looks like this, up 0.5% on the S&P 500 in the last hour. Lisa printing a new all-time high. on the S&P.
Which really is in line with what some people were expecting, although disappointment they did not get. If you want to take a look at whether this is a Fed that can outdo market expectations, it seems like they did. And the projections going forward really highlight how this market likes to run ahead of even where Fed pricing is.
We'll go just under 2,600. It's absolutely crazy. When I first started trading gold, last March, last April, around then, shoot, we were high 1900s, low 2000s. Crazy.
Point cut has made a difference in this market.
Mohammed, you alluded to this. If they go 50, the price will build to go 50 again. Is that what's happening?
That is what's happening, and the market loves this. And it's been the repeated conditioning of the market. Give it something, it will want more.
I look at this late in the press conference, John, when we get to the political questions. Like if I was to parachute John into the Alarian Institute of Behavioral Economics and Policy,
Would you behave?
the first thing I would say, the answer is there's two United Kingdoms out there and there's two Americans out there. And he has to address within his neutrality in the political debate, those two Americas. It's not just about Bob Michael and the portfolio on Park Avenue trying to figure out what to do next.
How does he navigate some of those issues, Mohammed? How difficult is it to set policy for two very different experiences in this economy?
It's very difficult. It's even more difficult when politicians are shouting,
Go 75.
go 75. No, it is really difficult. What's not clear to me is if he is actually buying insurance, what is the cost of that insurance?
Get out of this position.
Insurance is hardly ever costless.
I'm gonna sit on my hands here a bit.
Outside of having insurance for the economy, and that's something we'll only find out over time.
What's the cost of buying insurance for the economy, but also for the Fed and for its political independence and its reputation therein? I just wonder if it's more difficult to make the decision now on November 7th, now that you've had this initial 50 basis point rate cut, and you have a market that's now saying, yeah, you could do another one in November.
Yeah, and that was the argument all along, starting July. Don't get yourself in this situation, but it is what it is. And then now we're going to have to navigate this. I think Powell is going to be very clear. He'll say we are not impacted by political issues, just like he will say that he is blessed, to use his word, by lots of opinions from outside. But ultimately, it's what they're deciding that room.
And they will get lots of opinions after this one. In just a moment, 2 minutes away, Chairman Powell will walk into that room and give us a news conference for the next 60 minutes or so. We'll take that in its entirety on Bloomberg TV and on Bloomberg.
All right, live. As this meeting starts, I'm gonna pop this meeting on the big TV. While I get some breakfast and continue on with the rest of my day. Live execution on today's call. Felt good. The thrill of it, and I love it. 50 basis point cut from the Fed this morning. And so it'll be very, very interesting to see how the market reacts over the next couple of days, and particularly tomorrow, seeing how big Bank of England and the Bank of Japan set their rates in reaction to what the Fed did today. So appreciate you guys joining us on this live call. Back for another one tomorrow morning, 5:30 a.m. Same time, same place. We'll see you in the next one.